Hi there, this is Steve May, the Market Chartist, on behalf of ForexFraud.com, and we're now taking a look at both the pound and the euro versus the US dollar, both posing upside risk going through into late February and then, into late January and on into early February. So for the pound, first of all, the initial sell-off that we saw in here through December and the early part of January down to 119.82, actually shifting the tone more negative through this 120.83 level. But the subsequent rebound with various developments on the Brexit situation in here, up through 124.32, we saw the market over the last week or so, and that has signaled a neutralized the intermediate term bearish theme, shifting back to an intermediate term neutral range environment, that broader range defined by 119.82 and 127.75. However, within that broader range, the outlook for late January, early February is still to the upside from this recovery theme, which is intact, and there's real threat for a push through 127.75, which would establish a better basing structure and actually aim the pound significantly higher than going into February. For the euro, a not dissimilar story in here. The push higher through 2017 in here so far, up through 106.70, previously neutralized the bearish outlook in here and shifted us back to a range theme. This range defined by 103.39 on the downside, and this spike high from December at 108.74. Within that range theme, despite a setback in here towards the end of last week, the recovery theme for January leaving the skewed bias within that range into late January, early February to the upper end of that range, and real threat for a push above 108.74, which would then signal a more bullish intermediate term outlook. This has been Steve May, the Market Chartist, on behalf of ForexFraud.com, and I wish you a great trading week.